Morning, everyone. Welcome to this morning's edition of the MPC Markets Morning Call, 9th of May, Monday, 2026. So a little bit of a tale of two stories here this morning. So we'll just cover Friday night, first of all. Chip stocks absolutely rocketed. You had the likes of, Intel up 13%, AMD up 11%, Cisco up 5%, Micron up nearly 16%. Broadcom was a laggard at only up 4%, and Nvidia obviously, much bigger market cap, but up around about nearly 2%. You had Tesla up 4% as well, as it sort of starts to be a little bit included in the overall chip stock thing. But obviously this morning we've got oil at the moment up 2 to 3%. As it stands, as Trump's knocked back the Iranian deal, sitting here about 90 in WTI, about 98.34, up 3% as it stands. So we will have a little bit of a a softer open, I would imagine. Overall, I think the futures futures are really looking, they're down about 0.3, 0.4%. But this section of the market and the chip stocks in the bottom left-hand corner there, as you can see on the heat map, that's some pretty dark green, and that's also just on the back of on the back of an incredibly strong run already. So this doesn't even include Friday's and Thursday and Friday's run. You've got the SOX index up 150 odd % year to date. In the 12 months. And look, we got chip stocks here in the last 3 months. You got Broadcom up 34%, AMD's up 131%, Intel up 155%. Micron up nearly 100%, SanDisk up 154%, Qualcomm up 60%, and the list just goes on, really. Anything involved in data centers really heading higher. Even the old analog chips at Texas Instruments is up 30%, and Vertiv, which supplies much of the internal data center fit out in terms of humidity controls, power controls, air and temperature controls, power, etc. Up 90% in the last 3 months as well. You'd be pretty disappointed if you're a Cisco shareholder, only up 15%. But yeah, so there has been some incredible runs here in a lot of these stocks, and you would start to think that they're a little bit overstretched, I would imagine. There still seems to be a lot of quoting of these earnings being 28%. Just a quick reminder, if you strip out these, one-time items, we're talking in the vicinity of about $60 odd billion. That brings it back to the pack to about 16, which is still a very good result, 4% better than what was expected. The S&P 493, basically the rest of the S&P outside the Mag 7, 16%, and look, which is a downside better than what they're expecting at 10%. But the ex hyperscaler proxy, we're looking at 10 to 12% overall. So, and that if we get any sort of bump in the road there with any of these things, we're going to see earnings drop back. We did have payrolls numbers on Friday night, up much better than expected, and they back-to-back monthly gains for the first time in nearly a year. Unemployment held steady at 4.3%, but that's really been a little bit skewed on the back of the fact that Trump's obviously hampering migration, and that keeps that unemployment rate down a little bit, as 70 odd thousand people don't get in per month. But we did have consumer sentiment numbers come in at their worst level since 1952 when they started the number, and in the US. So I think what you got to remember, these numbers are lagging, and I think this consumer sentiment number is highly forward looking for the rest of the market. And I would say that we're going to have some issues leading forward, because this is inflation not only at the Bowser and electricity bills due to these hyperscalers, but it's also people's discretionary income is being not just dented, but just absolutely massacred. So, and you're seeing that come through in the consumer sentiment numbers there. So, Aussie market being very cyclical, and probably due to quite a significant number of changes expected that are coming up in the budget in the next in the next sort of 36 hours. It'd be tomorrow night, Tuesday night. And generally what they do in the Australian budget is leak it out first and then and sort of see, that gives them an opportunity to sort of test things. But we had a bit of a run, obviously, last week in silver, the best performer, copper, the second best performer, and then platinum, the third. So we had, nearly up 11% in silver, 7.5% in copper. Copper is back at some record highs in some of I think the London contracts. And then crude obviously was down 9.2, but we're now back at, as I say, we're still sort of rallying here, about 98.50 in crude at the moment. So that, that move's been erased. And I would imagine, that's gonna hurt markets on Monday morning. There's rumors floating around that there's been some short position taken on by Trump-related entities. That seems to be crap to me, because the tweet was released and then reposted before any markets were open. So, I would say that is someone just trying to, push a bit of an agenda there. So just be very careful on that. I mean, I'm not saying it's not true, but I'm a bit bewildered as to where they could have possibly got short. So you've got futures at the moment down about 0.25%, both the Dow, the S&P, and about 0.14 in the Nasdaq, and by a little bit more in the broader market in the Russell 2000. So federal budget, look, these are the worst, not great for us. Basically, new share and ETF investors, worst off. And this is only based on, the winners and losers, Chalmers tax overhaul, and who's going to get hit the hardest, and based on the rumoured policies. Trust holders and family businesses are going to get hit as well, a major hit. Established property buyers. So that means anyone so you're not going to get that capital gains tax win. Sorry, not capital gains, that negative gearing win. And also, capital gains will be moved to, being replaced with that 50% discount on an established property. And, that's going to be a really sharp hit. So basically, unless you're building a property, you don't get all these benefits. And essentially local councils are so like dumb that, you can't get any land released, you can't get anything built anyway. So, I guess it's good policy in theory, but unless they force the hand of these local councils, which are nothing more than glorified strata managers, then we're going to see I would say the floor fall out of that established unit market, particularly, which has already seen pain in the likes of Melbourne. I think in the last 10 years, 3 out of 4 unit investors in Melbourne have gone backwards, and it sort of dispels the myth of you always make money in property. So yeah, there, and as we sort of see, as people what ends up happening is the building industry just basically accounts for the fact that people are going to want to build more places, and they'll just up the price. They did it in the solar, and and then they'll turn around and whinge that because a decent policy's just been taken advantage of. But high balance supers and renters are going to be moderately hurt as well. And then and surprise, surprise, existing property investors will not be hit, and got to keep the boomers on side until they die out, basically. And nothing in there about gas taxes, nothing in there about anyone who buys a seat at a Labor Party fundraiser. So they're all safe. But and small businesses, revenues under $10 million, net winners. There's a 20,000 instant asset write-off made permanent. R&D incentives have been improved, and a temporary loss carryback scheme, and companies receive no CGT, so there's no reform to touch them in that regard. So yeah, this is the last week about buy the dip. You're going to have to get your bids in, your forms in over the next couple of days. We've been really inundated on this, as for we're seeing markets at record highs. We've got our webinar tomorrow as well. So if you're interested in this, it's around about the $17,000 down per $100,000 notional or exposure to the S&P vol targeted index, and over a 3-year period, we're saying that the midterm always creates some form of a dip. We are in the absolute nosebleed section in most of these indexes here at the moment. And as I say, massive red flag there on that consumer sentiment number on Friday night, the worst ever in history. So, this thing can't probably go on forever. So look, scan the code there, and you can get on board this thing. It's available to retail and wholesale investors as well, and essentially what it does is your entry price is the lowest Monday close of the 6-month period between May 18th and October 18th. So you're effectively buying the dip on that Monday. During that period, it's called a look back. You can go and see, if you scan the code, you can get the investment explainer video there. So yeah, if this is your last chance essentially in the next couple of days to get on board this thing. If you've got index ETFs like S&P index ETFs or FANG Plus, etc., it is a bit of a it's a bit of a no-brainer really. You just got to do the maths. It's capital efficient, and not only that, it's incredibly it's taking into account some of the best seasonality you see every 4 years due to that midterm. Tomorrow we've also got a we've got a webinar, and I'll just change this so you can get the code up there. Kai, Chen, and myself, we've got about 50 odd years, or they're about 40 to 50 odd years prop trading experience and professional trading experience, and we're just going to run through some tactics to invest smart at record highs. Everyone seems to be fearing a fall. It will be available on demand as well, so it's at 11 o'clock tomorrow, and you'll be able to watch it live and ask some questions live, and send in some Q&A. But obviously, if you can't make it because you're at work or you got something on, if you register, you will be able to get the video on demand as well. So yeah, there was some news about CSL this morning as well, some sort of write down. I don't know whether that's priced in or not, but you're probably going to have to keep a couple of eyes on that. But overall, people, have a great day. Be a little bit wary out there. Make sure you're reviewing your portfolios, and make sure you're potentially taking some money off the table here, because it is looking like it's starting to look a little bit grim moving forward, with oil at $100, consumer sentiment falling, new tax rules, and a lot of uncertainty leading into the midterm elections. I think this is probably one of the better opportunities you'll get to to sell this, to sell out and get into some cash to be able to buy the dip moving forward. So yeah, but have a great day, and we will speak again on Tuesday.
Feeling lost with investing? Meet Mosaic. Mosaic is MPC Markets' platform that turns confusing markets into clear, actionable guidance for your portfolio. Discover Mosaic today. Portfolio and trade ideas in one place for clients and subscribers, powered by MPC Markets.